Okay. What's going on, people? Welcome back. We got another big FOMC meeting, possibly the biggest FOMC meeting, coming in about 5 minutes. It's going to start in about 5 minutes, and we are going to be covering all this for you guys. We got a special guest today, Brad from Infinite Crypto. Brad has been very knowledgeable in the space, in the crypto space, and he's been on around the blockchain quite a few times. And we're going to bring him on, and we're going to get the stream started in about 30 seconds. All right. What is going on, people? Let's get rid of that. Okay. What's up, Ty Stu? Holler at you guys in the chat really quickly. What's up, Mario? Stragahart in the house, as always. H2, what's good? Welcome, and welcome, Brad from Infinite Crypto.
Hello, man. Thank you so much for having me. Pleasure to be here.
Always good to talk to you, Brad, and have you on. Very, like I said, very knowledgeable in the crypto space, in the crypto community, and everybody right now is, we're all tense, we're all on edge. Bitcoin's on edge, the Bitcoin price on edge. Bitcoin right now testing resistance as we're going into the FOMC meeting. We've got the Fed interest rate decision coming up right here with this dotted line, and then you got this one coming in right here. So this is the Fed rate decision. Then right immediately after, 30 minutes after, is going to be the conference, the conference. So you can see that Bitcoin did wick up out of that resistance, and now we're still back below that resistance. So we're going to talk about the Bitcoin price going into the FOMC meeting. We are getting pretty harsh rejection here coming in on the 30-minute time frame here. So we're going to talk about the Bitcoin price. We got some news to talk about. We're going to get some opinions here from Brad on what's going on with the markets. And of course, we're going to take a look at the meeting itself. We've got about 3 minutes before the live meeting will start. So we'll get into that. So Brad, what have you been doing, lately? So as far as the crypto market goes.
Man, like I was telling you off stream, I've been kind of slightly disengaged compared to normal. Although I've still got a few things going on. I've been, picking up a little bit more of one of my favorite altcoins, Beam Swap, the ticker, Glint on that. One of the tokens that I really like that I did a live stream AMA and a deep dive video on a few months ago called Dimitra, has done about a 30x at its peak from when I did my live stream. It's down right now to about a 15 or 20x. But so I've still been, checking stuff out, trying to figure out where I want to put my funds. But I kind of took my own advice and really started working hard in a couple of areas to create some cash flow so that I could, put some money into some of these cryptos. For a lot of months, I was recommending these cryptos to other folks, but I really didn't have an income stream coming in. I was just spending the assets that I had to live. And so a lot of times I wasn't able to take advantage of my own advice the way that I would like to have. And, now with about a year until Bitcoin halving, I'm really making some money a priority so that I can get as much money invested before this next bull run commences.
Absolutely. And you're absolutely not alone, I'm sure, when you say being disengaged with the crypto space. And it's just natural during the bear market, I think, for people to become that way in most cases. But like you were saying, though, the key right there is to you're like you said, going back to your own advice and building cash flow so that you can prepare for the next halvening and the next bull cycle. So I'm sure many people can relate to being disengaged during the bear market, the pits of the bear market. But the point is that we are at the moment, or what would they say? They would use the word precipice. We're at the precipice of the next bull cycle. This is the
Yes.
make or break moment, for me, you, for anybody that's in crypto traders, investors. It's the key moment here, leading into the next cycle. So
Yeah.
it's really interesting stuff. It's crazy to watch, and crazy to watch these meme coins lately that have been just going crazy. You got Pepe or PP, or I really don't even know how
Pepe.
you pronounce Pepe, but
I think it's Pepe or Pepe,
Pepe.
like Pepe Le Pew.
Yeah, but it's a frog. It's a bull. It's a bullfrog.
Right.
I mean, hey, but meme coins. I'm all about meme coins. We've got our own meme coin at Average Joe Crypto, the AJC coin, the Average Joe meme coin, which is it's not an animal coin. It's a human being coin. It's a human being meme. Representing every average Joe out there in crypto. So. Definitely check out the links in the description if you're interested in that. Also, Brad's links are in the description, and we got 6 seconds going into the meeting here. Let's see.
Yeah, do you know how quickly into this meeting they will announce their decision as to what they're going to do with the rates?
That I do not know. I don't even know exactly how long the meeting will be. Let's see. This is the press conference. That
I
will
never
be after.
usually watch them live, but I think they're usually several hours long, so it could technically be a while before we find out what the next rate hike is going to
Absolutely.
be.
Yep. For sure.
Do you have any strategy? Are you planning on longing or shorting Bitcoin depending on the answer that we get?
Well, judging by what's going on right now, Bitcoin is really, honestly, I mean, it'll depend on the decision, right? If all bets are that we're going to see the interest rate raise another 0.25 basis points, I believe.
Yep.
So and if nothing changes, then I would expect Bitcoin to come down. Come down from here. If for some reason there's a more dovish outlook, then we might expect Bitcoin to break this downtrend here, this short-term downtrend, and push higher back towards 30K. But it'll depend. We're going into the meeting now, so it's really going to depend. You can see Bitcoin right now getting rejected as we're going into the meeting. But I actually thought that this would be the meeting over here, but it's actually not the meeting. And this is the press conference, not the actual FOMC meeting. So let's see. It's only showing the press conference. So possibly we won't know until the press conference. Yeah, none of these are actually live. So possibly it'll be after the press conference, maybe, because none of those are actually live. So it looks like it's going to be after the press conference.
Okay.
Unless I can, let's see here. I'll pull this up over here.
Stregahard and Ty Stew in the chat. I see that you mentioned Mario too. Make money just says it already increased 0.25%.
Nice. Yep. I'm not seeing So I guess we won't actually know. My guess is we won't actually know until the press conference.
Makes sense.
Which is all
So
right.
you're thinking that a 0.25 basis point raise is kind of expected, probably not going to be considered bad news or cause anything to dip too much that Bitcoin keep
Right,
on trucking.
right. Yeah, and it is expected. It shows here, um, it's an 85% probability is what they're showing here. So that we will see the rate increase again. But besides the rate increase, really, it's probably going to depend on, I guess, more so of the sentiment that Jerome Powell gives in the press conference, right? The sentiment towards inflation and um, the
I
future, what they plan on doing in the future.
I just got a alert on one of my other channels that says Federal Reserve hikes interest rates by 25 basis points. So it sounds like it's official.
Okay. Well, that was
So it'd
quick.
be
If
interesting.
yeah,
Yeah, interesting to see. So I got a quick question for you. I know you're the doing the interview today, but I was just curious. Do you think that before the next Bitcoin halving, that we'll see Bitcoin dip below 20,000 at any point over the next year before this halving happens, or do you think that that's unlikely?
um, well, to be honest, um, for that question, I would refer back to 2019 when we had a nice run. Beginning of 2019 was a nice run, and then of course we had the pandemic, which basically we've seen Bitcoin crumble all the way back down to the bear market lows. So honestly, unless there's some kind of catalyst like that, unless there's some type of catalyst that to push the price down, um, honestly, I feel like things are happening more in Bitcoin's favor with the banks collapsing and everybody not really in favor of CBDCs. Most people not wanting to go along with this. I've seen that the Bitcoin hash rate was at an all-time high. The Bitcoin holders at an all-time high. So really, you would think that Bitcoin should do well going into everything that's taking place, right? So, but if there's something could take place. There's something that if the powers that be, if the big money wants to get in, back in at some lower prices and liquidate all the peons, then it's possible. It's possible. But it's hard to really say. We're only at 28,000. A dip down below 20,000 would not be that difficult if something were to take place that caused the price to go down. Bitcoin can move quickly in a short amount of time. So,
Yep.
um,
So on the flip side, what do you feel like the positive potential is? So you're talking about the last bull and bear. If I remember correctly, Bitcoin halved in about May of 2020, and it didn't reach its back. It didn't get back up to its previous all-time high of around 20,000 until right around, I want to say, January-ish of 2021. And then it just had that massive run up there just in a short period of time, January, February, March, April, and then peaked at 64,000 in May. So between now and that next halving, what do you think the best that we're going to see? Can Bitcoin run back up to 40? Can it get to 50? Is it going to stay in the 30s? I mean, obviously this is, not financial advice, and this is just your own, gut feeling or what you've learned over the years, but like,
right.
you just feel like it's just going to trade in a pretty tight channel for a while, or do you see the possibility of it maybe doing something exciting and running back up into the 40s?
Well, personally, when I look at what's going on with Bitcoin, let's see. We'll stretch this out. Honestly, I could see us pushing as high as possibly up here near 40. There's a ton of resistance up here. Now, also though, I really think there is the possibility, if we do start to see this trend reverse to the downside in the short term, we could come down. The 200 daily moving average is coming in at about 22,300, and if we were to get a sharp correction here to the downside, I would be looking around that 22,500 to 23,000 range down here for support. But
Okay.
the next resistance coming up, the heaviest of it is right here at about right about 37,800 to 40,000. So I think that if we were to continue higher, I would be looking at that range for rejection, possibly, for sure. But as far as going all the way up to 50 before the next happening, I'm not. I mean, that would be a stretch, I feel like, because that's so close to the previous all-time high. But now 38
I
to
agree.
40, 38 to 40, I think is a possibility for sure.
Okay. I like the sound of that.
Yeah.
Kind of. Actually, I'm kind of. I don't want anybody too mad at me, but I'd love to see a correction back down into the $20,000 range and hang out there for a little while. Give me an opportunity to now that I've got this income stream rolling to be able to buy a bunch of stuff at some of those lower prices again. So it wouldn't hurt my feelings if we saw one more good correction.
Absolutely. Let's see. Let me. My bad. Okay. Um, I do. We could correct down to that 22,000 range, but you can see here the Bitcoin price did actually already bounce and test. We fell back down and back tested the 200-day moving average for support after breaking through it and caught a nice bounce on it, which stemmed this nice run. So maybe we don't need to come back down to test it again, since we have already tested it once. But for sure, if we start to get down below into this area of this indicator, that's typically always a good indication that you're going to see a return down here. So right now we're bouncing off the top of it, holding support, barely holding support on the daily. So we'll see, because a nice bounce off of this would continue this bullish momentum.
Nice.
Throw it back down to the 30-minute. So going into the meeting, and we're still below resistance. Nothing's really changed. We're still trading in this channel. So setting up here possibly. Yeah, massive resistance there going into the meeting. You got a bearish engulfing candle on the 15-minute, and you had a nice wick up and then got slammed back down. Tons of resistance up here around 28,800. So while we're waiting to see what Bitcoin's going to do, the Iranian Putin said, "What the F is PayPay?" Man, it's a frog coin, bro. It's a frog. It's AJC token's pet. No, it is a frog coin, man. Yeah, the animal coins are taking the crypto space by storm, bro. Let's get it, ETH. Let's get it. ETH getting saucy. ETH getting saucy. Let's see. ETH getting saucy. ETH is looking pretty saucy right now. Testing a pump. We shall see. We shall see.
Yep. Definitely one thing that I've learned about these bear markets is these top coins like Bitcoin, like Ethereum, they sure hold their value a heck of a lot better than the speculative altcoins.
Absolutely.
So there's been
Absolutely.
a few times in my crypto career that I've wondered, had I just invested all of the money that I've invested into Bitcoin and Ethereum, if I actually wouldn't have done better than all of these crazy altcoins and things that I've done. I've had some great success with some altcoins, but I've obviously, had some huge losers too. But I mean, like at one point in time back during the last bear market in about 2019, I was buying Ethereum at about $265, and it actually went all the way down into I got some at a little under 200. I was kind of DCAing, and then we had that huge crash in March of 2020 where it went all the way down to about $75. But at one point in time, I had about 100 Ethereum, which had I just held that 100 Ethereum, would have turned into, 100 times 4,500 would have turned into 450 grand. And,
But you didn't hold?
instead, I started selling it to buy altcoins in 2020. And then, I mean, I still did pretty good in that, in the bull market in 2020, 2021, but because I didn't take as much profit as I wish I would have, because I wasn't expecting the top to be 68, I was expecting the top to be 100 plus. Now a lot of those altcoin positions are, back underwater. And so had I just bought and held Bitcoin and Ethereum, I technically think I might have had a better portfolio.
Yeah.
At this point, if I
Yeah.
sold everything at the peak, I might have been better off doing what I did. But considering that I held, and now a lot of those altcoins are back down to, negative 90, 95, 99%, where, Ethereum is only down a little over 50% from its all-time high. Something to think about, folks, when you're out there trying to decide what you want to invest your money into.
Absolutely. For sure. I mean, 100 Ethereum, man. But yeah, if you, but nobody can really time. We can't time it perfectly. Nobody can, and the market's just a chaotic, storm, man, with the influencers and everything, and keeps you really confused on what to do. And plus the Bitcoin price faked everybody out when it passed 68K just slightly. So, but same here, if absolutely, I do feel like the altcoins are more so for just maybe a couple you might have long-term holds in that are really strong projects, but most of them I would say are good to make some profits in and put those profits into Bitcoin or ETH or some of the top cryptos for sure.
Yep.
Don't get married to the coin.
If I learned my lesson, because I came into the market towards the end of 17 and got a little taste of that bull, and then held and bought and watched my investments just get crushed off in 18, 19, and 20. Then it came back and I did extremely well in late 2020 going into 2021. But then I definitely held too much again, and it's hurt over the last year and a half watching it all kind of get decimated again. So hopefully I've learned my lesson. My goal at the end of this next bull run in 2024, 2025 is to get up to an 8-figure portfolio. But this time around, I'm planning on being smart enough to get at least 75% of that off the table, maybe even 100%. We'll see. Now that I've seen what crypto does, I think to myself, why leave anything in it almost? Pull it all out, let it all get crushed off again in 26 and 27, and then buy it all back. Just for the pure fun of it, though, I can't see myself ever exiting the market completely, and I'll always be making some moves, but I definitely plan on pulling out a significant portion towards 2025.
Absolutely. Everybody's calling for the peak of the next bull cycle towards the end of 2025. But I would definitely keep in mind what happened the last bull cycle. I would be watching out for that to take place again, when you have influencers and everybody telling you that Bitcoin's going to go this, and then it shorts you out right below the mark, just enough to liquidate everybody that had their eyes set on that price just a little bit higher. So I would definitely be watching out, and always, not financial advice, but take profits. That's one of my biggest regrets, is not taking more profits.
Yep.
When I had Ethereum, I didn't get in at 200, but I got in at 400, and when it ran up to 4,000 per coin, and I sat there and looked at it and thought to myself, I should cash all this out right now, and I didn't do it. Even sitting there thinking about it, didn't take my own advice, preach it to my channel, all through the bull cycle, last bull cycle, preached it, take profits, and here I am. I waited to take profits after we started dipping down. We got down to like 2,800. That's when I started to take profits, because I missed the top, and that's a common mistake, So don't get discouraged, though. Don't get discouraged. And like you said, I could never exit completely out of crypto, because crypto is life, as Sam Price, the crypto lifer, would say. Crypto is life, and I agree with that statement. It's a whole different lifestyle, way of life, in my opinion.
Amen. Amen. Here's a interesting question. I've been wanting to ask this of a trader for a long time and never had a good opportunity. Hopefully, some of your viewers will enjoy this and think about it. So, in the stock market, sometimes folks will hedge by, like, selling puts or selling calls. I've always wondered, is there a way to hedge? So let's say that I own a Bitcoin, for instance, and I think that it's kind of at the peak, but I don't want to just sell it, because if it continues to go up, I would be sad. Is there a way, say, if you owned one Bitcoin, that you could then, say, maybe take like a tenth of a Bitcoin and like short it at 10x leverage, say, so that now no matter what the market does, you basically break even? So you're not necessarily looking to do it to make money, but it's just like, if the market goes down a bunch, because you've got this reverse trade in, if you will, at a like a 10x leverage, you actually end up with the same amount of cash value. If I'm making any sense at all there, do you know what the point that I'm trying to get to? Is there a way to
Yeah,
hedge by
right.
leveraging?
So that you're protected whether or not the market goes up or down, right? Is what you're getting
Yeah,
at. Yeah. I, I believe that would work. I think I pretty much got what you were saying. That way, you still have, you said, what you said, a third of a bit. You put a third or a tenth. You still put a tenth of one
yeah,
in. Yeah.
something
Uh,
like that.
Short a tenth of it, and then you still got the rest in case it goes up. And then if it happens to dip, you capitalize on the dip. So yeah. And then if it's short, if your stop loss hits or whatever, you're not down really, because the rest of your holdings went up to cover the loss. So
Yeah.
yeah, absolutely, absolutely should work that way. Bitcoin really, really testing resistance here. I got a super chat right here from Amber Turd, or Amber Heard, aka Mrs. Steal Your Turd. Much love to you guys, man. I appreciate you guys. Appreciate the $2 super chat. Harmony One and VeChain, please. Absolutely. We'll take a look at it real quick. Brad, what's your opinion for Amber Heard, Mr. Steal Your Turd? What's your opinion for her on VeChain or Harmony One? Do you know anything about those coins?
VeChain has been a really one of my favorite tokens for a long time. I've been investing in VeChain since all the way back in 2018. Back, actually, a lot of people don't realize it, but VeChain did a reverse split. I want to say 100-to-1 split. So it was literally like an $8 token. And after this reverse split, it went down to an 8-cent token. And they did that to make it more desirable for people to buy. So I was literally buying VeChain back when it was, the original VeChain back in 18, and I've held it all the way through. It throws off it spits off a second token called VTHOR, VTHO. And so I like it because you can sell the VTHO, kind of like a dividend, but hold the VeChain itself, the underlying asset, basically forever. VeChain did pretty well in the last bull market. It was all the way down to about, I want to say, as low as 0.003, and it went all the way to as high as 20 or 30 cents during the last bull market. So people that had gotten into it in 18 and 19 did extremely well. And I see, a lot of potential for it to do well again in this next bull market. So it's definitely one that I have in my portfolio, and one that I recommend folks get, especially once they've got a little bit of a base. They've got some of the some of the like Chainlink and Matic, and some of those top 25 tokens. I think VeChain has dropped down now into the maybe the 40 or 50 market cap range. I'm not 100% sure, but yeah, I love VeChain. I do own a few Harmony ones, but I'm not super versed in that project well enough to where I would like to, where I would feel comfortable giving anybody any advice. Yeah, VeChain's at 40th right now, and it's sitting at about 2 cents. Its all-time
Nice.
high was 28 cents. So it's got about a, about a 15x to get 14x to get back to its previous all-time high.
Yeah. The chart, the VeChain price actually looks like it's trying to set up for a reversal to the upside here. You've got possibly an inverse head and shoulders, maybe trying to take place on the weekly, and then you have a descending broadening wedge, which could typically break to the upside. Especially if this support that you're at here at 2 cents, right there at it, 0.0195 cents, if this can hold. If that doesn't hold, you might come all the way back down to 0.013, or a little bit lower, possibly down to this target, which was actually my VeChain bear market bottom prediction target, would have been about 0.0118 down here at this pink trend line. So, if we do not hold that support, the current support right here, you can see back here, and then here, and then we're back at it now. VeChain could pull back down and fulfill this actually fulfill our measure move target here from the bear market. If it does not hold support, if it does hold this support, and you come back up, test your resistance near 0.027375, get a break of that, you definitely could run. We could see VeChain double potentially to 0.044 at this previous support level back here that was lost. So absolutely, VeChain possibly getting ready for a move now. Of course, actually, it will depend. Bitcoin driving the markets, FOMC Fed driving the markets. So it will depend a lot on what happens there. But as far as bottoming out and trying to find a reversal here to the upside, VeChain looks like it's hard at it. So let me go on to Harmony One real quick. I am also a big fan of VeChain. I think the use case itself, I just think the use case itself, providing solutions for supply chain management, I think is a big issue. We've obviously seen what's happened with supply chain management through the pandemic and everything, and I definitely think that VeChain has an awesome use case. Of course, there are skeptics, right? Skeptics of VeChain. Skeptics are all over the place, but if your heart's in something, you can't listen to the skeptics. Potentially,
amen to that.
absolutely. Potentially the same thing trying to play out here for Harmony One. Now, I would point out that Harmony One is below the 50-week moving average. Harmony One is also below the LSMA on the weekly, and on the weekly candle here, looks like it's wanting to take a nosedive potentially. You have the last little bit of support coming in right here, and it's coming down to that support now, but you could squeeze in here. If you hold that support, you could bounce in this range and squeeze into a little breakout. But I just don't like the way it's below the moving averages. So I would not be too bullish on Harmony One until it gets above those moving averages, which means it would have to break this resistance. So I'd watch out for that for Harmony One for sure. Being below those moving averages is not typically a good thing. Now, I really am bullish on Bitcoin on the weekly, just because of the fact that you're above, you're well above this indicator, and this chart right here shows you Bitcoin's not been above that indicator since back here in March of 2022, and you didn't even last, right? That was the beginning of the bear market right here. You got rejected there. You couldn't stay above that indicator and went into the bear market. Now you're back above the indicator. The indicator's starting to flip green on you here. It flipped bearishly here. Once this flips bullishly on the weekly, then I would say we are good to go for a rise in the Bitcoin price. But as of now, we're still testing the indicator, holding support on it. But it is very bullish to me to see Bitcoin above this indicator on the weekly.
I love it.
Bitcoin holding
How many
resistance here.
how
Go
many
ahead.
years have you been studying trading and learning about this? And how long did it really take you to where you've kind of got comfortable and really felt like you had a pretty good handle on it?
Well, I always like to think that, you never know everything, and you're always learning. You're never done learning. But like you said, as far as being comfortable with it, I've been in crypto since 2018, and as soon as I learned about crypto, I started looking at the charts and trying to, because I watched a lot of other people do it, and I thought, well, it shouldn't be that hard to figure this out if you just do a little bit of research into patterns and trends and stuff. And so I started figuring it out, and I'd say after the first year of just learning and teaching myself, is when I started to become comfortable with it. And then, I started my YouTube channel, and I started hitting a lot of price predictions. During the bull cycle, I was hitting targets left and right, breaking breakouts. I was like the wedge king. Like, I love wedge patterns because they're almost accurate. Almost all the time. I mean, just about. You can take a wedge pattern measurement and put it at the breakout, and it will almost always put you right at the target. So I started hitting a lot of targets on point. Started gaining some attention with that, and so I'd say about the first year. It took about a year before I was really, really comfortable with telling somebody, telling my followers, like, hey, I think this is going to happen. And it got to where I could really identify trends and things. And then, of course, if it's like anything, though, if you don't practice, your skill wears down. So I went on vacation, took a little bit of break from crypto and stuff. And then, you just have to always refresh your memory for sure.
Nice.
Let me get into the chat real quick. We got another $2 super chat. Much love. I invented PayPay coins. And we got another one. Synthetics for Daddy. Absolutely. Coming in with another $2 super chat. I appreciate it very much. We'll take a look at synthetics, and another $2 super chat from Amber Heard. Just thanking for the TA. I appreciate it. Much love to you guys. So let me take a look at synthetics real quick.
Wow.
Okay, so synthetics. We were looking at this. We've been looking at this a while back on synthetics, and look at what you're doing on the weekly. So you're technically above your downtrend, in my opinion. I mean, I guess you could stretch this on out, make a few connections. 1, 2, 3, 4. I mean, it would make sense there. I just thought it made more sense to come down here. But it really does. It looks as though, to me, we've broken out for synthetics, honestly. But like I said, you could make these 2 wicks here connect, and then that's going to put you back inside within the pattern. But synthetics, honestly, another one looking like it's getting ready to set up for a reversal. I mean, as long as you hold this support where you're bouncing here, and you put in a higher low right here, then you should bounce and put in a higher high potentially if you break the downtrend resistance. So definitely looks as though synthetics, a lot of these altcoins looking like they're priming up, gearing up for a reversal from this bearish trend into a bullish trend. 2 years of dumpage. Yeah, 2 years of dumpage, you would think it's about time to reverse, right?
Right. I love looking at stuff like this. It reminds me of why I'm in crypto. I was just on CoinGecko while you were looking at it, where you're looking at it. I noticed its all-time low was about 3.5 cents. Its all-time high was around $28. So if you'd have bought $100 worth of it at its all-time low and then sold it at its all-time high, your $100 would have turned into 80 grand.
Man, see, that only in crypto.
Right?
Only in crypto. That's just like Shiba Inu, man. Shib to the moon.
Yep.
Like Shiba Inu, I mean, people became millionaires. Some of them became millionaires overnight, only in crypto. Only in crypto. Um, Now, are they going to continue to allow that to take place? I don't know that they can really get a hold on it. Honestly, you can see with the crypto tax bill that they can't control it, so they're going to tax it to the point where you can't benefit from it. We've got the Dame tax, um, making crypto miners pay for the cost they impose on others. I mean, but then you have this. Bhutan has been mining Bitcoin with hydropower since Bitcoin price was at $5,000. So, why do we need why don't we just incentivize crypto miners to use hydropower, solar power, something? Why do this? This is not to protect anybody. In my opinion, this is not to protect anybody.
I agree. How
They
does it
start
affect
this.
people outside? Wouldn't it only affect minors inside the United States too? I mean, they can't
Right,
tax people from other countries, right?
right, exactly. So, like, does the White House not understand that crypto and Bitcoin's global? I mean, yeah, very good point. Because how is this going to help global warming or climate change? Like when you said, it's only going to affect the U.S. miners when most of the miners are outside of the U.S. The majority of the crypto mining firms are outside of the U.S. It's just it's an attack on crypto mining itself, right?
Yep.
That's what it is. Don't get it confused. Anything they do that's bad, they will disguise as good. They will always make you think that it's for the greater good of all, when really you're just hurting yourself and your loved ones and everyone else in the world. So I mean, that's how it goes. Sadly, it's the truth.
Yep.
And look at this. And of course they throw this in here. Pollution from electricity generation falls disproportionately on low-income neighborhoods and communities of color. I mean, of course, it has. Of course, yeah. You're mining. The Bitcoin miners are ruining low-income neighborhoods and communities of color.
Right.
Like,
I saw a crazy statistic. If I heard it correctly, I heard that while the U.S. is doing all this crazy stuff in the background, they've been buying up Bitcoin. I was told that the United States government owns 1% of the Bitcoin supply.
yep. Um,
Reminds me just like back in 18, 19, and 20 when all of the JP Morgans and Warren Buffett's and all of the big guys were talking about how Bitcoin was a scam and it was going to zero in the news, yet in the background they were setting up the infrastructures and slurping it up and getting ready to offer it to their clients.
exactly. Exactly. Yeah. They not only are they buying Bitcoin, but they have all the confiscated Bitcoin from the Silk Road, which they've been dumping. They did actually. That was already in the news. They dumped quite a bit of Bitcoin. Um, and they can time those dumps. They've got enough Bitcoin that they can time those dumps, those Bitcoin dumps, appropriately to affect the market the way they would like to. And Bitcoin is highly manipulated. The crypto market's definitely, it's manipulated for sure, but it's still, in my opinion, more uh, beneficial for the people. Even now, with all the manipulation, it's still better for the little guy than, say, the stock market. in my opinion.
thousand percent.
Unless you got an insider or something,
Yeah.
you know. I mean,
Yeah.
the stock market's definitely Wall Street's for the big guys. Absolutely.
I mean, the beautiful thing about crypto, everybody wants to complicate it. They want to try to, time it. All you have to do to be successful in crypto is buy and hold. Yeah, it can take longer during, depending on when you decide to buy. But if you're consistently buying on a regular basis during any 2 to 5 year period of time, you're going to make massive, massive, massive gains. It's just inevitable.
Absolutely. And there we go. So
Ooh.
we are at the press conference now, I believe. Is that right? Let's see. So it looks like the price dumped right at the press conference. So we have this 30-minute candle right here at the press conference, and it dumped. Let's see.
It's interesting. On CoinGecko, it's still showing like on the last 1 hour time frame 0%, and it's only down 0.5% for the last 24 hours. But man, that big red line we're looking at there would lead me to believe otherwise.
Well, now this is on the Bitfinex chart, so different charts might be different. But on the Bitfinex chart, it did drop to 28,200 right there.
Okay.
Let's see. If we go to
CoinGecko, it's showing at 28,586.
Looks
might take it a little bit of time to catch up.
Oh yeah, for sure. Yeah, all the charts seem to show this same wick down to about 28,200. So let's see if the meeting is live yet. You guys let me know in the chat. Can you hear this audio from this? Can you hear the audio?
I can't.
Let's see. Look at that. Look at that bounce. High volatility right now. Look at ETH.
Oh yeah, Ethereum made a nice little bounce.
Okay, let me re-add this to the stream.
Specifically, but I will say this. These are fiscal policy matters for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite adverse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Oh, thank you. Yeah, Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks. And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank which talked about the amount of losses or mark-to-market losses they had in their portfolio. There was nothing in it about that I recall anyway about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves, or many banks, are now are attending to liquidity and taking opportunity now, really since the events of early March, to build liquidity. You asked about the separation principle. Like so many things, it's very useful, but ultimately it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Go to Victoria. Hi, Chair Powell. I wanted to ask you, obviously with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. That is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
So, Brad, what's your opinion on this? Like, as far as J.P. Morgan Chase buying out the banks, and if J.P. Morgan, like he said, there was 14,000 banks, and then I believe he said now there's only 4,000 banks, and I agree with what he said about it's good for the system to have small, medium, large banks, but of course I'm not a fan of the banking system at all. But if we are going to have it, it's good to have all those and not just be all these big banks running and controlling all the money. So, J.P. Morgan Chase buying out First Republic.
Yeah, I don't. Oops, I'm getting some feedback here.
I hear you pretty good.
Okay. I'm just getting an echo. I heard myself twice.
Oh.
But yeah, it's still not fixed. I'll just ignore my echo.
Deadwood said it's a purposeful consolidation of banks to force the CBDC, and I would agree with that.
That's kind of where I was headed to.
Yep, to usher in the CBDCs, basically. So, basically, we don't have much of a choice as little guys, unless you're just a multi-billionaire. We don't have really much of a choice except to kind of go along with what happens, unless we decide to actually do something about it. But they're going to keep doing what they do unless we do something about it. So, I've been telling people, my grandfather, I've been telling him, I was like, don't know if you should be trusting the banks too much right now. I'm not really sure what you should do. I can't really convince him to buy Bitcoin. He still don't. I tried telling him to buy a whole Bitcoin at 15,000, and he, I couldn't convince him to do it. But had he done it, he would have doubled his money. But we're kind of just stuck doing whatever we is forced upon us, and it's not right, because many people, if not the majority, are against CBDCs and a digital currency. So it's pretty bad that they are able to basically force something upon the people that the majority don't agree with, and we don't really have a say in it. That doesn't get voted in. We don't get to vote whether or not we want CBDCs. They just kind of are going to force this upon us, and I'm kind of afraid for what it will do. I don't know for sure if how they will go about it, enforcing that, and with Bitcoin still being out there, what's to stop people from just holding Bitcoin still, and then maybe transferring it into the CBDC to make purchases? I'm just, there's a lot of unanswered questions when it comes to all this taking place. But and I'm sure that many people out there are in the same boat as us. We're here on the sidelines, kind of anticipating what's going to happen and trying to think of ways to prepare ourselves for what's going to happen. And and in some cases, that's a tough decision. It's a hard thing to figure out in some cases when everything's somewhat still up in the air, except for one thing that I do know for sure, and that is the Bitcoin halving. That's the one thing that is almost for certain. It's never failed in over a decade. The 4-year cycle has continuously played out time and time again, and signals the bull market once we have the next Bitcoin halving. So I am still trusting, and I still have faith in Bitcoin, blockchain, crypto, and the next halving. And I still, like you, expect the next cycle, end of 2024, end of 2025, should be some good times. Now, I think a lot might, here in the U.S., I think that the U.S. election coming up is going to have a big factor in things too as well. as far as the markets go, depending on what happens with that. So we'll have to wait and see what happens with the election as well. So I think that depending on what happens with the election, it could really push things one way or the other. I just don't think that the Bitcoin 4-year cycle will break. Regardless of what happens, I feel like it's engraved into Bitcoin's history and people's minds. Traders and investors' minds. It's engraved into their minds. Buy Bitcoin before the next Bitcoin halving. So I think that no matter what's going on in the world, I think people are still going to be buying Bitcoin, loads of Bitcoin, going into the next halving cycle. So I don't think we have much to worry about as far as that goes. Like you were saying earlier, buy and hold, buy and hold.
I agree.
Well, as you can see, the algorithm, man, we actually got a community guidelines warning a while back. It wasn't a strike, but it's a warning. They give you a warning first, and and then if you get a strike, then you get banned for like a week or whatever. But ever since we got that warning, the analytics, man, the engagement, everything's been way down. But really hoping that with a little more consistency, we can get right back on track with it. But I'm gonna let this. I'm gonna see where this is at. This meeting will probably last a long time.
If
So
this is a sufficiently restrictive stance, does that data need to accumulate, or could it accumulate over a longer period than a 6?
the warning, Deadwood. It said for scams and deceptive practices is what we got the warning for.
Ongoing one. You can't with economic data. You can't. You've seen take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that that a few months of data will persuade you that you've got this right, kind of thing. And
Yeah, scams. I think it's because I was trying to do a giveaway that night, an AJC giveaway, and I left the stream, left it running, and had a thing up on the screen that said at so many likes giveaway, and I guess the algorithm looked at that as deceptive or something, but who knows? But as of right now, I mean, it looks like to me that Bitcoin is not doing a whole lot. You got a lot of volatility right here at the meeting, in the press conference, at the decision and everything. You had lots of really volatile wicks here on the 30-minute, up, down. But look where you landed. You landed right here. The price is still consolidating within this falling channel, within this range. So not a lot happening yet. And honestly, most likely, I believe we'll probably see more of a reaction from Bitcoin in the markets probably going into later this evening, or possibly even tomorrow or the next few days maybe, because lots of people probably aren't as attentive to what's going on right at the moment. Some people may not hear of the news, find out, or start seeing things about this till tomorrow or later this evening. So we might see more of a reaction come in later on. But as of right now, we're still just consolidating into this falling channel. Nice support down here around 28,200, trying to give us a nice hold. I am too. I am very shocked. Yeah. Well, Brad, I do appreciate having you on, man. We'll have to do this again for sure. Like I said, I've been kind of off lately with the algorithm just beating us down here on this channel, man, just beating us down. But definitely going to work on getting the consistency back with the content and doing some more live stream collabs. So as always, like I said, great to have you on. Look forward to doing it again.
Yeah, man, it was an absolute pleasure to be here.
Always, always. And with that, guys, I think we'll probably go ahead and cut it off. I think what I'm going to do is leave the stream running after me and Brad leave. We're going to leave it up on the press conference if it's still going on. And I'll leave it up for a little bit. All right. Well, much love to you guys, man. I appreciate each and every one of you as always. Thanks for joining us, and I'll see you next time. Don't forget to check the links in the description, and of course, check out Brad's channel and follow him on Twitter. Follow me on Twitter. Check the links, and hope you guys have a great one. Always good to have you on, Brad.
So much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think the case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal, and then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, those and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time. By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have expanded, did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among consumer spending. So, speaking of causes of inflation, do you see expanded profit margins as a driver of higher prices? And if so, would you expect them to narrow soon and contribute to reduced inflation in the coming months?
So higher profits and higher margins are what happens when you have an imbalance between supply and demand. Too much demand, not enough supply. And we've been in a situation in many parts of the economy where supply has been fixed or not flexible enough. And so, you know, the way the market clears is through higher prices. So to get, I think as goods pipelines have gotten, you know, back to normal so that we don't have the long waits and the shortages and that kind of thing, I think you will see inflation come down, and you'll see corporate margins coming down as a result of a return of full competition where there's enough supply to meet demand, and then you're really back to full competition. That would be the dynamic I would expect.
Michael McKee from Bloomberg Radio and Television. Can you tell us something about what your policy reaction function is, your policy framework is going forward? When you look at the economy at the next meeting, are you looking at incoming data, which is by definition backward looking? Are you going to be forecasting what you think is going to happen? Are you ruling out the rate cuts that the market has priced in?
I didn't catch the last part. Ruling.
Markets have priced in rate cuts by the end of the year. Do you rule that out?
Okay, I got it. So what are we looking at? I mean, we look at a combination of data and forecasts. Of course, the whole idea is to create a good forecast based on what you see in the data. So we're always looking at both, you know, and it will, of course, it'll be the obvious things. It'll be readings on inflation. It'll be readings on wages, on economic growth, on the labor market, and all of those many things. I think a particular focus for us going now over the past 6-7 weeks now, and going forward is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards, and is that having an effect on loans, on lending? And you know, so we can begin to assess how that fits in with monetary policy. That'll be an important thing. I just, you know, we'll be looking at everything. It's, again, I would just point out, we've raised rates by 5 percentage points. We are shrinking the balance sheet, and now we have credit conditions tightening, not just in the normal way, but perhaps a little bit more due to what's happened. And we have to factor all of that in and make our assessment of, you know, of whether our policy stance is sufficiently restrictive. And we have to do that in a world where policy works with long and variable lags. So this is challenging, but you know, we will make our best assessment, and that's what we'll be thinking.
What about the idea of rate cuts?
Yeah, so we on the committee have a view that inflation is going to come down, not so quickly, but it'll take some time. And in that world, if that forecast is broadly right, it would not be appropriate and to cut rates, and we won't cut rates. If you have a different forecast, and you know, markets have been from time to time pricing in, you know, quite rapid reductions in inflation. You know, we'd factor that in, but that's not our forecast. And of course, the history of the last 2 years has been very much that inflation moves down. Particularly now, if you look at non-housing services, it really hasn't moved much, and it's quite stable. And you know, so we think we'll have to demand will have to weaken a little bit, and labor market conditions may have to soften a bit more to begin to see progress there. And again, in that world, it wouldn't be appropriate for us to cut rates.
Courtney Brown from Axios. I'm curious how you view the role of the overnight reverse repo facility in the context of the current banking stress. Do you think it's contributing to the stress by making it more attractive for money market funds to compete with banks for deposits? And did the committee discuss any changes to the structure of the facility, or do you see that being put on the table in the future? Thanks.
Sure. So we looked at that very carefully, as you would imagine, and it's really not contributing. We don't think now. It hasn't actually been growing. It moved up, it moved down, and then moved back up to where it was. What happened in the when there were the big deposit flows, which by the way have really stabilized now. What happened was institutional investors took their uninsured deposits and put them in government money market funds, which bought paper from the Federal Home Loan banks and things like that. Over the course of maybe the last year, retail investors had been gradually, as they do in every tightening cycle, they've been gradually moving their deposits into higher yielding places such as CDs and other things, including money market funds. So that's a gradual process that is quite natural and happens during a tightening cycle. What was unusual really was the institutional investors moving their uninsured deposits and spreading them around and things like that. But it doesn't seem to have had any effect overall on the overnight repo facility. That is really there to help us keep rates where they're supposed to be, and it's serving that purpose very well.
Sarah Ewell-Weiss, CBS News. I want to go back to the debt ceiling for a moment. I know you talked about that in terms of fiscal policy, but can you just speak towards what the impact of a default would mean for Americans across the country, the markets, and borrowing?
Yeah, I would just say it's. I don't really think we should be. We shouldn't even be talking about a world in which the U.S. doesn't pay its bills. It just shouldn't be a thing. And again, I would just say we don't. No one should assume that the Fed can really protect the economy and the financial system and our reputation globally from the damage that such an event might inflict.
Scott.
Thanks, Mr. Chairman. Scott Horsley from NPR. In his report last week, Vice Chair Barr identified a couple of the factors that he thought contributed to the regulatory, or the supervisory lapses at Silicon Valley Bank. A policy change in 2019 to exempt all but the biggest banks from strict scrutiny, and also what he called a sort of cultural shift towards less aggressive oversight. You were here in 2019. Do you share that view, and what would it take to get the stronger oversight that you and he said in your release would be necessary?
So I didn't take part in creating the report or doing the work, but I have read it, of course, and I find it persuasive. I mean, I would say it this way: a large bank, not a very large bank, a large bank failed quite suddenly and unexpectedly in a way that threatened to spread contagion into the financial system. I think the only thing that I'm really focused on is to understand what went wrong, what happened, and identify what we need to do to address that. Some of that is, it may just have been technology evolving, we have to keep up with all that, but some of it may be our policies and supervisory and regulatory, whatever. Well, what our job is now is identify those things and implement them. And that's kind of the only thing I care about is, and I feel like I am accountable for doing everything I can to make sure that happens.
Thank you. Evan Reiser with MNI Market News. Chair Powell, are we in the early stage or nearing the end stage of the banking turmoil among regional banks? And secondly, do you still have a bias to tighten rates? Is that what the statement is saying?
So, I guess I would say it this way. There were three large banks, really, from the very beginning, that were at the heart of the stress that we saw in early March, the severe period of stress. Those have now all been resolved, and all the depositors have been protected. I think that the resolution and sale of First Republic kind of draws a line under that period of, is an important step toward drawing a line under that period of severe stress, okay? I also think we are very focused on what's happening with credit availability, particularly, you know, with what you saw in the beige book, and you will see in the SLUICE, is small and medium-sized, small and medium-sized banks who are feeling that they need to tighten credit standards, build liquidity. What's going to be the macroeconomic effect of that? More broadly, we will continue to very carefully monitor what's going on in the banking system, and we'll factor that assessment into our decisions in an important way going forward.
Okay, Greg.
Thank you, Fed Chairman. Greg Robb from MarketWatch. I just wondered if you've done any reflection on your own actions during this crisis and leading up to it over the last, since you've been Fed Chairman. I think I've heard you say a couple of times that you deferred to the Vice Chair for supervision. Do you think that was the right way to go about this? And yeah, comments on that. Thank you.
Sure. So let me say, first of all, I've been chair of the board for 5+ years now, and I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations, and I do feel that I'm personally accountable to do what I can to foster measures that will address the problems. So on the Vice Chair for supervision, you know, the place to start is the statutory role, which is quite unusual. The Vice Chair, it says, shall deploy policy recommendations, develop policy recommendations for the board regarding supervision and regulation of depository institution companies, and shall oversee the supervision and regulation of such firms. So this is Congress establishing a 4-year term for someone else on the board, not the chair, as Vice Chair for supervision, who really gets to set the agenda for supervision and regulation for the Board of Governors. Congress wanted that person to have political accountability for developing that agenda. So the way it works, the way it has worked in practice for me is I've had a good working relationship. I give my counsel my input privately, and I offer that, and I have good conversations, and I try to contribute constructively. I respect the authority that Congress has deferred on that person, including working with Vice Chair Barr and his predecessor. And I think that's the way it's supposed to work, and that's appropriate. I believe that's what the law requires, and you know, but it isn't. I wouldn't say it's a matter of complete deference. It's more, I have a role in presenting my views and discussing, having an intelligent discussion about what's going on and why, and you know, that's my input. But ultimately, that person does get to set the agenda and gets to take things to the Board of Governors, and really in supervision has sole authority over supervision.
I just wondered if you had any regrets, or was there anything that, you know, decisions that maybe you regret now in light of what's happened?
I've had a few. Sure. I mean, you know, who doesn't look back and think that you could have done things? Control the controllable. What we control now is make a fair assessment, learn the right lessons, figure out what the fixes are, and implement them. And I think that Vice Chair Barr's report is an excellent first step in that, but we've got to follow through.
Hi there, Megan Casella with Barron's. Did the possibility of pausing at this meeting come up at all, and how seriously was that?
For the 25 basis point rate increase was very strong across the board. I would say there are a number of people, and you know, you'll see this in the minutes. I don't want to try to do the head count in real time, but people did talk about pausing, but not so much at this meeting. You know, that I mean, there's a sense that we're much closer to the end of this than to the beginning, that, as I mentioned, if you add up all the tightening that's going on through various channels, we feel like we're getting close or maybe even there. But that, again, that's going to be an ongoing assessment, and we're going to be looking at those factors that we listed in to determine whether there's more to do.
I'm curious too how to interpret that and the changes to the statement. Is the bar higher now to raise rates at the next meeting, or would a strong jobs report or inflation print be enough to push the Fed to tighten again?
I don't want to. I couldn't really say. I just think I think we've moved a long way fairly quickly, and I think we can afford to look at the data and make a careful assessment.
And we'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. You mentioned a few times about the lessons you learned from the banking crisis, that you would learn the right lessons. What are those lessons?
Well, I just would start with something that's changed, really, which is the run on Silicon Valley Bank was out of keeping with the speed of runs through history. And that now needs to be reflected in some way in regulation and in supervision. We know now that we know it's possible. I think no one thought that was possible. No one had. I'm not aware of anybody thinking that this could happen quite so quickly. So I think that that will play through. It will be up to Vice Chair Barr to really take the lead in designing the ways to address that. But I think that's one thing. I guess I would just say that. Then we're gonna revisit. It's pretty clear to me anyway. It's clear that we need to strengthen both supervision and regulations for banks of this size, and I'm thinking that we're on track to do that as well.
Can you be any more specific on the stress testing or looking at banks that have specific concentrations in certain parts of the economy?
Yeah, that's what Vice Chair Barr's role really is, and he'll take the lead on that.
Okay, thank you.
Thank you.